Hey guys, this is Rudy coming at you live from Lake Worth Beach in Florida. I've been traveling, I've been on the road, been out of the country, and obviously I haven't made a video for quite some time, so I've got some catch up to do. But while I was away, I was putting together some presentations, and I'm going to share some of them with you. So I'll be recording a few videos, so if you have time, you can spend a few minutes with me and catch up and listen to some of my rants and raves, and we'll go from there. The first thing I want to do is talk a little bit about energy picks for 2024. Um, and what I'm going to do for you in the first place here is share some picks from the smart guys who basically post the top 3 picks that they have from an energy point of view. And then I'll share some of mine with you so we can compare maybe, 3 or 5, 3 of theirs and, a couple of mine. Anyway, let's go into this and we'll talk a little bit about energy here. Obviously, as you know by now, I'm an energy bull, and I'm assuming if you're watching this video and you've been following the channel and you subscribe to Bester Investor, you probably are an energy bull as well, or perhaps at least have a few positions long in some energy stocks. When we talk about oil and natural gas, we talk about issuers. Issuers are the issuers that issue the stock. In other words, the publicly traded companies that discover new sources of oil and natural gas. They extract, they process, and supply it to the economy. And your portfolio on energy could be overlapping any of those or all of them. That's oil and natural gas. If we talk about refining and pipelines, we talk about refineries that take raw materials like oil and process it into consumable fuels. Pipelines also transport oil, and as you know by now, I have some fairly large positions in pipelines, especially Energy Transfer, which is one of my largest. And then, of course, there's mining, right? So mining includes coal consumption, and that's still huge, despite what the green people would want to tell us. And in addition to that, also look to invest in some uranium mining, and maybe I'll leave the uranium sector for a different video. But these guys, I mean, uranium obviously fuels nuclear power, and coal pretty much powers the world, and those have to be mined. I don't really spend any time talking about renewable energy stocks. I'm not really interested in wind or solar or anything of that nature. Preferring to focus on oil, natural gas, refining pipelines, and mining. So why energy? Energy is absolutely crucial, right? Without energy, we wouldn't exist. The world wouldn't exist as we know it today, and humanity might be on the brink of extinction if it weren't for energy. In addition to that, energy has lifted more people out of poverty than any other program related to anything that humankind might have wanted to do in order to make sure that we as humankind survive. So energy is absolutely crucial. The world needs power. We need to create sustained long-term demand for energy, which already exists anyway. The potential, of course, if you invest in energy, is high dividends and growth. Now, many of you have commented in the past that Mr. Oxy loves dividends. Mr. Oxy indeed does love dividends. In fact, it's one of the most simple hedges that you can have against stock volatility, as your stocks go up and down as the market is going up and down. Of course, if you get growth in addition, that's even better. And I'm going to show you that at the end of this video, just to give you an indication of some of my stocks that have either experienced high growth or have been paying me high dividends, or both. And I'll show you 3 of those just as an example. Large developing economies help to grow the global demand. And of course, these large developing economies include countries like China and India that currently have at least 25%, maybe even as much as 30% of the world's entire population. Diversification within the sector. There's lots of diversification opportunities available within the sector, so you can feast on energy stocks and actually diversify quite easily across oil, gas, pipelines, drillers, refiners, retail, etc. And it's relatively recession-proof. Why? Because even when we are in the doldrums, like we were during the COVID-19 pandemic, early in 2020, even when the energy market crashed, it just bounced right back up again. And at the end of the day, people need energy, and we need energy every single day. You wouldn't be watching this video if it weren't for the fact that we need energy. So let's take a look at some of the top 3 picks of the smart people. So the first one is ExxonMobil. This company, this issuer, valued at over $500 billion, is one of the largest large cap stocks you can pretty much just buy and forget about and stick in your portfolio and view it as a high yielding savings account. If you'd like, it pays a nice dividend, around 3.5%. Exxon is the largest non-government owned energy company in the world. And the reason why that is important is because many of the large uh, energy companies in the world, including the largest, which is yeah, if we think of Saudi Arabia and countries like Brazil and even small issuers like Ecopetrol in Colombia, whatever these are, government-owned energy companies, and the biggest of them all is probably Saudi Aramco. And today we don't know how large the Russian energy companies really are because of sanctions, so we just don't know. Exxon has been aggressively spending to finance long-term energy production, and so they should. Exxon is a great company. I do not hold Exxon Mobil shares directly, XOM, but I do hold XLE, which is an ETF, and approximately 20% of XLE is invested in Exxon Mobil. You can see the chart here, ups and downs. We get lots of swings, and there are very frequently opportunities for you when the market takes a bit of a dip to buy in. Now, this chart is not up to date as of today. In fact, it's about a month old or so, but you can actually see that there would be opportunities for you. Like, for instance, at the beginning of this year, Exxon was trading at this little blue dot level over here, and now it's up here at around $113, $115. So it's generated approximately 9% so far this year. And in addition to that, you've earned that 3.5% dividend. So effectively, if you were in Exxon at the beginning of the year, you're up about 13% or so, despite the fact that the energy stocks over the past week or so have pulled back. It's just temporary. It doesn't really matter. So don't pay too much attention to that. The next one is PetroChina. So I don't have a position in PetroChina at all. In fact, I've never really looked at PetroChina. And it's one of those emerging market type stocks where it's probably high risk, high return. I'm not absolutely sure. If we need to do a deeper dive on PetroChina, we can. This is from Stock Rover, again, like Exxon was. Market cap around $250 billion or thereabouts. Huge dividend, 6.2%. That's very, very nice. The annualized return is only 2.8%, but if you add the two together, you sort of at around 9%. It's not too bad. PetroChina is based in Beijing. It's the largest producer and distributor of oil and gas in China and Asia on the whole. Given that PetroChina's market cap remains modest compared to the largest American and European energy companies, it could have more room to grow. That's obviously speculative. I don't know. I don't really know too much about PetroChina, but for Stock Rover, this was the number 2 pick. Once again, you can see at the beginning of this year, 2024, we saw PetroChina trading at around 70 cents or so, and now it's trading at around $1 or so. So it's up 45% year to date, plus that dividend of 6%. So you're well up over 50% if you invested in PetroChina. The next one is actually a stock I like and one that I know a little bit better. And just for the sake of being transparent, I will disclose to you that approximately 10, 12 years ago, Canadian Natural Resources, one of my clients. I do not have a position long in Canadian Natural Resources right now. But if I were to buy another Canadian oil stock just to kind of put into my piggy bank and draw this dividend yield of around 4%, Canadian Natural will probably be my pick. Of course, I have a large long position in Enbridge right now, so might swap out one for the other. But Enbridge pays me a dividend of around 7.5%. So for now, I'm quite comfortable just holding Enbridge. But if I had to open another new long position, I would not mind having Canadian Natural in my portfolio. The company has operations primarily in Canada, the North Sea, and in Africa. It's headquartered in Calgary, Canada, where I have done some work before in a previous life. So I'm quite familiar with this company, and it's a great stock to hold. If you have a long position in Canadian Natural Resources, you have probably done quite well. It shows you an annualized return of around 10% plus that dividend. Once again, you get opportunities to buy in when there are little dips like this that appear. So currently, I'm not sure where the stock is trading because my chart here is about a month out of date. But at the time I took the snapshot, it was trading at around $35 US. It was up approximately 30% for the year. And of course, it pays you that nice, big, hefty dividend as well. So if you were long Canadian Natural, you're up about 35% year to date, which ain't half bad. In fact, it's pretty good for a half a year. So if we look at them just sort of from a performance point of view, comparing one with the other, you can see on these lines over here, they color coded, obviously. The darker blue line is Exxon, which is my high yielding savings account, if we can look at it that way. Canadian Natural Resources, the yellow mustardy kind of line here in the middle. And then PetroChina outperformed them both. Of the three, I'm quite happy to have Exxon in my XLE long position. And if I had to add another one, I might add Canadian Natural to my watch list. If we look on the right-hand side here, I just did a little comparative chart just to compare them one with the other. The dividends for Exxon and Canadian Natural is about the same. Obviously, it's better for Canadian Natural for over 4% on an annualized basis in percentage from a percentage point of view. And the price earnings ratio is about the same, 13, 14. We want to be below 15, so they both potentially could make it to your watch list as a potential buy that you could have a long position in right now. As I said, I'm not sure about PetroChina, so I'm going to reserve comment on that one. I do want to share just a couple of my long positions with you. I have a very large position in Alliance Resource Partners. Obviously, as a US tax person, this requires me to receive a K1, which I have to include in my tax filing when I do my tax returns. But for me, that's a comfortable nuisance. I don't mind, because this has been a very rewarding stock for me. If we look at it this year to date, at the beginning of the year or at the end of last year, Alliance Resource Partners was trading at around $20. It's currently sort of in the $24, $25 range. Of course, it goes up and down as well, and you do get opportunities to buy in. Very frequently, people will buy into Alliance Resource Partners and hold it until the day before or until the day of the ex-dividend date, and then sell it, collect the dividend in cash, a few weeks later or a month later, and then maybe buy it again when there's a dip. I don't day trade, I just hold it long, so my position just grows and grows and grows, because I also reinvest my dividends. But for Alliance Resource Partners, the performance year to date up around 34% plus the dividend. I'll talk more about that in just a second. The next one is Energy Transfer. Similar kind of situation, up around 26, 27% year to date. At the beginning of the year, or at the end of last year, it was trading at around $13, $14. Now it's at around $15, $16. So it's up nicely, 20, 25%. And this one pays a nice dividend as well. So once again, it's a limited partnership. So I have to file my tax return, including a K1. This is one of my Canadian stocks, and this is actually a uranium miner, Cameco. It's one of my better performing stocks. It's a position I've held long for a couple of years now. Just since the beginning of this year, it's up 66%, which is quite nice, obviously. The year ended for Cameco at around $43, and now it's trading at close to $50 or thereabouts. Once again, ups and downs, as you can expect with pretty much any stock. But if we compare these three, which are long in my portfolio, so of the first three that I showed you, PetroChina, Exxon, and Canadian Natural, I only have Exxon indirectly because I hold it in XLE. These three, I actually have long positions that I hold long in my portfolio as direct equity holdings. Cameco has been one of my best performers by far year to date in my energy portfolio, up 66%, Alliance Resource 34%. Now, if we look on the right-hand side here, you will see that I am foregoing the dividend yield on Cameco, which is a really small dividend, in lieu of the fact that the stock has been a huge growth stock for me. So the 66 there is pretty much everything I have in Cameco. If the stock doesn't grow, I'm not having a dividend as a hedge. And right now the PE is 125, so it's probably not a good time to get into Cameco if you're not in Cameco, but it's been a great performer and a great stock for me, not only year to date, but actually over the past couple of years. Alliance Resource Partners, on the other hand, is up 34%, but it also pays a dividend of over 11%, right? So I can add these two together, and I actually reinvest my dividends, so I'm buying more stock all the time. So Alliance Resource Partners is up around 45% for me year to date, and that is pretty good. And then the same thing applies here to Energy Transfer, because it pays a dividend of 8%. Its PE right now is 14. So Alliance Resource Partners, based on its price earnings ratio of 5, is a buy. People are scared of coal. Thermal coal powers the world, so I don't know why, but obviously the bogeymen tell us every day that we're all going to die if we keep burning coal. But coal actually generates CO2, when you burn it, and CO2 helps with plant growth. So there's a bit of a dichotomy there because of contradiction in terms. But these are three that I hold, and then of course, as I said, I have Exxon long in XLE. So those are some of my long holdings in my existing portfolio, and three picks from the smart people, right? So I think Exxon is like a no-brainer. To a degree, if you're a Canadian taxpayer or resident or a Canadian citizen and you have a Canadian investment account, holding Canadian Natural in your Canadian account is probably not a bad deal either. It's a great stock, great company, a good stock to hold. And as I said, I'm not sure about PetroChina, but that might be the best performing stock of the year. Who knows, right? I don't have it, so I have nothing to gain and nothing to lose. You could tell me in the comments what you think about these stock picks and three of the longs in my account that I shared with you. And by the way, this is the first one of a few videos I'll make since I have to catch up, and I'll talk to you soon. Take care. Bye-bye.